You take a look at sterling, 135, a little weaker on the day in the midst of the stronger dollar. What's your take on what's happening with the cabinet reshuffle and what it means for sterling?
Yeah, I think it doesn't mean that much for sterling, unless it tells us something about the balance of power between the soft Brexit camp, maybe led by Harriman, the Chancellor of the Exchequer, and the hard exit camp led by Davies and Boris Johnson. So I think that mostly this is a function of sterling's weakness today, function of the dollar. And as long as we trade between 135, 136, I think we're neutral. We really want to watch the break out of that range.
Well, fair point. And what is your estimation? Is it a harder Brexiteers will still be in control after the reshuffle, or will we get some sort of softer Brexit people in?
Yeah, no, I think it's going to be still pushing towards that hard Brexit camp. I think that what's going to happen in this first quarter, really, is the discussion is going to be about this transition period. So the UK leaves at the end of March 2019, but it's going to have a transition period. That's what they got to negotiate. Under what are the conditions of that transition period? Will the European Court of Justice still get to determine things? What is the UK's ability to negotiate third-party trade agreements? That all has to be worked out during this transition period before the new relationship can be really negotiated starting, say, sometime in March or April.
There's some suggestion that Theresa may be coming around to really putting more emphasis on the commercial side of this, and particularly the banks. At the beginning, remember, she was sort of saying, well, that's their problem. We're not worried about it. Maybe she's turning around. What could she do that would really help the banks and the commercial side of it?
Say that she's going to stay in the common market. Stay in the single market.
Okay, what's the second thing she could do?
Yeah, I think it's tough. I mean, I think the issue is that if the UK leaves, then the banks, so the regulatory equivalence has to be maintained, which at the first, it might be maintained on day one. But sometime down the road, the EU is going to make some rule that the UK banks don't want to pass or don't want to accept. And that becomes then the not sort of regulatory disequilibrium. And I think that's when the problem comes. So I think it's very hard to do. I think that the UK still wants its cake and eat it too. I think they want to be part of the common market, part of the single market for trade purposes, but not in terms of European Court of Justice and not in terms of immigration.